All right, good day, friends, and welcome to our channel, Accounting Education. Today, we shall be treating a topic that is familiar with some of us, which is IFRS 5. That's non-current asset held for sale and discontinued operations. Non-current asset held for sale and discontinued operation is actually a sub of IAS 16, which is non-current asset. But in this IFRS 5 treats what's it called, the assets that entities have decided to hold for sale, and for example, and also if there is any other one that you need to, that any asset that will not be useful for the continuation of business, or of an entity. This is what this IFRS is talking about. But for today's class, we shall be talking about two sections of this. The first one is the sale of non-current asset. Sale of non-current asset shall be telling us about how it should be handled. And the next one we shall be talking about is the assets that are held for sale. Assets that are held for sale. Sale of non-current asset, that is, if a non-current asset has been sold, how do you treat it? Then assets that are held for sale, for example, that is, they've not been sold but they've been held for sale. Okay, how do you treat it as an accountant? So let's start straight away with sale of non-current asset. Now, under this, we shall be looking at two things, which is the general rules on derecognition, then assets that are held for sale. Now, this is it. General rules on derecognition. Remember what IAS 16 said about derecognition of a non-current asset. It says that all the carrying amount, that if you have a carrying amount, you must do two things. You must recognize it under two conditions, which is number one is if the asset had been disposed. If the non-current asset had been disposed, you must derecognize it. Then, and if there is no future economic benefit that are expected to arise from its use or from its disposal, then as an accountant, every entity must do what? Must derecognize such a non-current asset. Let me take it again. You derecognize a non-current asset when, one, it has been disposed. On disposal of the asset, you derecognize it. Then, secondly, when there is no future economic benefit that is expected to arise from the use of such non-current asset, then it is expected that you do what? You dispose it. I hope you're following. Okay. Now, if a non-current asset is disposed of, the gain or loss. Now, how do you treat the gain or loss of at disposal of every non-current asset? How do you treat it? That's what we want to talk about now. The gain or loss, remember, must be treated in your profit or loss account. It must be treated in your profit or loss account within the period with which such disposal occurs. The gain or loss should not be included in sales revenue. Please note, it must not be included in sales revenue. For example, if you have a generator that you dispose of, and and actually, generator is not the business. Sales of generator is not the business that you are engaging in. Your ordinary course of business is not the sale of generator. Probably you are selling furnitures. You understand? So if you sell your generator, you dispose, let me use the word, if you dispose your generator, whatever profit you seem to get from the sale of that generator should not be added to your revenue, because revenue recognition must be what you earn, what came in, the inflow that came in during or from your ordinary course of business. So you must not have the profit, or neither should you less the loss from your sales revenue. It's the profit or loss on the disposal of non-current assets must be identified only under